Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host, Mr. Kevin Hinks. But let's bring in our next guest, and that's going to be Landon Swan, the co-founder of LikeFolio.com, for a discussion on the retailers. Welcome to the show, Landon.
How you guys doing today?
We're doing well. We're doing well. So we're talking discount retailers. Dollar Tree had a good earnings report about a week and a half ago, spiked on that news. But we're starting to see foot traffic come back. And I think for Dollar General ahead of their earnings and some of these other retailers, Landon, that's the key, right? Because e-commerce sales are starting to slip a little bit. But these dollar stores need foot traffic, don't they?
They do. And I tell you what, one of the things, so actually, let me start by just saying that we are cautiously bullish on Dollar General. We got a plus 21 on our score, right? Negative 100 to positive 100. But most of what I'm going to talk about today is going to try to talk people out of that because, we love what happened with Dollar Tree. We were plus 59 going into that. Very strong score from LikeFolio. We loved the report as expected. Stock reacted well. But Dollar General is just it's not as strong as Dollar Tree. And what's interesting is a lot of it has to do with happiness. This is sort of the kind of like the Walmart of discount stores. People complain a lot about the organization of the store, the cleanliness of the store, the staff. Just the general experience is not great with this company. And you can kind of see where it's at on the happiness scale. Not real high, Big Lots and Five Below doing much better. But it's actually in line with Dollar Tree, which is interesting. You can see they're all have a nice shift quarter over quarter as we move into the holiday season. They're getting that foot traffic pickup. Five Below's not. That's one I definitely stay away from. But it's just kind of interesting because you've got a lot of factors coming into play. You've got supply chain issues. You got inflation issues. And, just like Dollar Tree bumped their price, I think for the first time in 30 years from $1 to $1.25. It's happening, and you have to move these prices up. You have to defend your margins. And of course, consumers are starting to get used to that. But how is that going to affect the foot traffic? Are people going to continue to shop at these discount stores if they feel like it's no longer a discount? And I think that's really the concern with this company, especially with the happiness where it's at. The positive side, though, I can say, grocery mentions for Dollar General are up about 30% year over year. And of all their segments, that's the best score for happiness. So happiness is a very important metric, and we can see how people are happy with the grocery, and that's the leading growing segment. And they're unhappy with the general experience and the cleanliness, staff, those kind of issues with the store. But it's also important to note with inflation that we've got a very large increase in people looking for deals, about 20% year over year. So that is where people are hunting for a bargain. They need to stretch their dollar a little bit further. And I think that's just going to go up as inflation continues to go up. You can't just print money and expect prices to stay the same. So prices are going up. Wages may or may not be, depending on the person. And so people need those deals, especially the shoppers who are going to Dollar General. It's a lower income type of person, and they just need better deals. And I think that is where you may get some pushback from the consumers. So, plus 21 is where we're sitting at on the score. And we're encouraged that in this sector that the discount retailers, Dollar Tree hit just like we expected at plus 59, but plus 21 is a much weaker score. So I'm a little bit hesitant on this one going into earnings.
First of all, Landon, let's recalibrate all these names. Don't you think it's time that we recalibrate all these dollar names? Because let's face it, Five Below already has a 10 below section. Right? We'll all agree with that. It's already got one there. So that price has gone up. Dollar Tree, let's call it $1.25 tree, $1.50 tree. Let's face it, you got to start changing these names. And then Dollar General, let's call it $5 General, right? Let's adjust. $5 Corporal even. Let's give them a demotion if you don't think they're as good. Because these, let's face it, inflation is affecting all these. But here's my question. I'm teasing, but here's my question to you. Isn't this Dollar General, if inflation really starts to hit this economy over a long period of time, couldn't Dollar General benefit from that as people go shopping at this is considered a discount retailer. couldn't they benefit like those lower price stores do during a time of inflation or a recession, or in our case, there's no recession anywhere close, but certainly inflation is affecting prices, right?
Yeah, I agree completely. I think it really depends on how they play it. I think that Wall Street has rewarded companies who've defended their margin and raised prices. We saw that with Dollar Tree. We've seen that with other companies out there. And so it depends on what they do and how sensitive consumers are to those price increases, because, you know, they're going to have to raise prices to defend their margins, but so is everyone else. So it's going to be very difficult for the consumer to say, oh, well, Dollar General raised their prices 20%, so I'm going to have to start shopping somewhere else. Wherever they go is going to be up as well, because that's how inflation works. It's not company specific. So I agree. It's going to be very difficult for the consumer. And I think as long as they defend those margins, and if they can get their happiness up, then we could be bullish on this company long term. On this specific report, it's a good score. It's not a great score. I just don't want people seeing the report that Dollar Tree put out and saying, oh, well, then Dollar General must be going up as well. I don't think that's the case. It's positive from LikeFolio, but not a home run.
And you mentioned the comparison to Walmart in this retail space. Landon, and you've got Target, which is up here, according to a lot of people, and according to your data, that people like going to Target, the experience, right? Clean stores, remodeled stores. But when you look at that comparison and some of the data that you guys have on Dollar General, and I know you're weary about that plus 21 score on this name, is that what you look at? Because margins are going to get squeezed, right? Because of their supply chain issues and prices going up. So do you look at it that way, that, hey, Walmart fell after earnings and it was a pretty good report, but they really hammered on the fact that we're getting hit on margin pressure?
Yeah, I think that's really the key. And unfortunately, I don't have any insight into what the executives are doing. What's the plan at Dollar General? Are they going to defend margins as strong as Wall Street wants them to? Now, I can tell you that, Big Lots also reports soon, and they've got a stronger score. They're around plus 49. Maybe we can do the show on that tomorrow. But in that sector, I would say that Dollar Tree was our favorite, followed by Big Lots, and then Dollar General at plus 21. Again, that's a bullish score, but you get in around 15 or so, and that's neutral. So it's right on the edge. But I would say that of all of them, Five Below is the weakest. We've actually have a negative score on it. So I agree completely. I think it all comes down to margins and how much are consumers going to be willing to take. And in the end, I don't think it's their choice. I mean, this is a very important store for many people. They've got 17,000 locations. 75% of the people in this country live within 5 miles of one. And for guys that live in Chicago, 5 miles may seem like a lot, but out in the country, that's 5 minutes away. I mean, that's one straight shot down the highway and you're there. So everybody in the country can get to one of these pretty quickly, or not everybody, but most people. So this is important for many, many people. And I don't think that there's a ton of competition if they do raise prices. So hopefully they defend margins and Wall Street rewards them.
Yeah, that 5 miles at about 4 o'clock Central Time takes me about 30 minutes. If I don't hit the highway there, Landon. So to your point, yeah, 5 miles is a lot different up here than it is down there where you are in Florida. But I think this is all going to be about foot traffic. Margins are going to matter. Foot traffic should go up, but we'll have to wait and see what kind of guidance they give, because they increased guidance last quarter, and they announced an additional stock buyback too. So lots to go over here, but thanks for the data once again, Landon. Have a great day.
You guys, thanks a lot. Stay warm.
All right, we'll try. Hey, that's Landon Swan, the co-founder of LikeFolio.com.